Welcome to the basement. On today's episode, we're going to talk about a massive Bitcoin pump, some altcoins to keep your eye on that are making huge gains, as well as a Worldcoin that's going to index everybody's eyeballs. All this and more on today's blockchain basement. Bum, 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 bum. You ready for this? I'm ready. Welcome.
If you're going to screw me, at least pull my hair.
Hell yeah. What do you got?
They could start chopping off fingers. They're like, give me your seed phrase, but I don't know it.
Out to give the numbers out. And I was like, no, hang up the phone right now.
Or like when it dropped in 2020, was it like exciting?
400,000 to 600,000. The generational signals are now.
Level. So I don't even know if we're going to get back below there. But if we do, that's kind of where we...
All right, welcome into Blockchain Basement. We're gonna have a really good episode for you guys today. Real quick, before we get started, if you guys love it when Bitcoin pumps, smash that like button. We've got Bitcoin well above 25 into the 26Ks, pulled back a little bit since this morning, but a great day when it comes to Bitcoin pumps. We're gonna have a really good show for you guys. Obviously, shout out to all of you in the chat. Shout out to some of our guests here today. We've got a new visitor here, Brian Emery, who runs, or Emery XP runs the 24/7 Hit Network channel for us.
Let's go.
Obviously, Decker joining us today. Decker Bobin, we don't know. You know, he's just hopping and bopping over here. The lovely Hannah Hughes. And today we've got the Drew Wider, crypto prepper on the board, sitting in place of BJ today. Is BJ out the rest of the week, or is he out? Is he back tomorrow?
He'll be back Tuesday or Wednesday next week. So.
Tuesday, Wednesday next week.
Yep.
Okay, so we're gonna have to be missing the glorious locks of BJ the Biscuit Jesus, but we will survive without him. We love all of you guys, of course. Shout out Gary Ginsler says Moonboy is gonna get wrecked. Sack Nasty 86 in the chat. Raul San Miguel. It's Autopilot. Jeremy Lister. Cyber Posty. We got Manawak. Covert 3R T4s, Chef Crypto Thorn, Crypto Cody, IB Mike King, Razmataz, Joe Stonks, and everybody else in here. Everything looks a little wonky today. I guess it's the sideways stream. I don't know what it is. I think the tripod's got a little off. We're all leaning to the left or to the right, but it's all right. We're running a little bit late today. We're gonna start off with this video. I saw it from Kelly from BitLab Academy, shared it on Twitter. I just thought it was a fun video. See, Silver Beast says, TJ, look into this. Federal Reserve Bank of San Francisco was bailing out Silicon Valley Bank over the last year. This has been going on for a while. That is interesting. I will dig into that later on after the show. But real quick, let's see if you get the audio here. We've got this 23 bank run, the rise of Bitcoin. It was just funny. I think it's another one bites the dust. I was watching this morning. Figured I'd share it with you guys. Hope you guys enjoy this video, and hopefully the audio works, but check it out.
banking system is safe.
Silvergate shutting down.
The collapse of Silicon Valley Bank is causing shockwaves.
Regulators today abruptly closed Signature Bank.
Just take a look at the shares of First Republic, down 65% here at the opening bell.
This is the biggest failure since 2008.
Another one bites the dust. Another one bites the dust. Ow! Another one bites the dust. Hey. Another one bites the dust.
In breaking news, the U.S. Federal Reserve has bailed out the Silicon Valley Bank.
Money printer go burr.
0 2. Euros are going to 0. The yen's going to 0. The Chinese currency is going to 0. It's all going to 0 against Bitcoin.
I'm jacked. I'm jacked to the test.
Look at what's happened. This is dramatic. 48% probability right now that the Fed does nothing. Sorry, is that one right?
Is that right? Also just a great scene.
President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
Peace.
Do you expect other banks to fail, Mr. President?
Whatever, corn pop.
Should all depositors be protected at all banks?
And I'm out. Yeah, there you go. Great bank. I can read it. Here you go. Boom.
A bunch of people ask for it.
I
also saw somebody said Young, Dumb, and Crypto back together again.
Oh!
I had to mention that.
Wow,
I
don't know who that was.
YouTube chat up to the top if you really want to see it.
That's funny. Yeah, me and Brian, Young, Dumb, Crypto.
Wow.
We've been making crypto videos in a basement for quite some time. This is not not our first rodeo here. So yeah, so I don't know how who's feeling the pumps, who's in great mood. I mean, Bitcoin's sitting at 25.8 right now, a little bit of a natural pullback, not no shocker there. Ethereum up over 1,700, but I did real quick. We're gonna probably hit some more altcoins at the end, but some really big pumps on altcoins. Again, a lot of these have pulled back somewhat at this point, but there was plenty over 30% the last couple of days. Just wanted to kind of highlight Conflux, CFX doing really well. Threshold, Immutable X, we've talked about a lot on this channel. Stacks, STX, Singularity, Ajax, again, Render Token, Mina Protocol, a couple we've talked about a lot. Filecoin, I know a lot of you guys like. DYDX, GMX, two more. Again, no shocker to see decentralized exchanges or decentralized exchange protocols doing well with all the risk going on with centralized exchanges and centralized banks and all that sort of stuff. The Graph, Optimism, Loopring, all, again, playing with the AI, playing with the layer 2s, playing with the zero knowledge, all of these Flow Engine, all of this stuff up more. Where's Bitcoin in here? Bitcoin. So you got to go way down before you get to Bitcoin. So all of these things, Avalanche, Dash, VeChain, Sandbox, Axie, Algo, Near, Engine, Flow, all strong altcoin projects. And this is a strategy you guys can implement when things pump a lot. You can keep it just like when you're going down and you're looking for things that maybe don't react as much to the downside. Look for things that overperform or underperform based on what the market's doing. So when Bitcoin has a 10% pump, what had a 30% pump? What really pushed up off of that? What were people accumulating? I know we talked a lot on Friday of last week and basically Thursday and Friday about accumulating Optimism. It's crowd favorite here. Also, a handful of those other ones that were mentioned. So kudos for you guys if you were able to buy the dip and get into that. And again, we're going to look towards the end of the show. I've got a tweet thread that's got 30 different protocols, a lot of them in the decentralized, DeFi kind of space. So we'll look at a lot of those towards the end. We're not gonna have time to go through all of them. Some of them where I just mentioned right there. Some of them we've talked about a lot on the show. Some of them are brand new. Another sneaky one to keep an eye on is Trader Joe. That's another decentralized trading protocol on, is it Avalanche?
I think
that one's on?
I know it's definitely Avalanche.
Yeah, Avalanche. There you go. So all of these ecosystems starting to grow, starting to have real ecosystems built on them where within those ecosystems there are opportunities, even bear markets, bull markets, accumulation markets, whatever you want to call this market. I think we're on the way up from the bottom at this point. We're set up perfectly for that midsummer rally that we've talked about a decent amount on this channel, either Q2, Q3. If we were to see a rate pause, that would be pretty wild. I still think there's a pretty good chance we see 25 basis points, but I don't know. After what we just experienced, I mean, how much more can they afford to let this go before things start going crazy? So we're going to get into a couple of these stories. And then talk about some fun stuff here. Bitcoin spikes as U.S. inflation meets estimates. So obviously the big news of today was the CPI numbers coming in. Basically, as expected, rose by 0.4% month over month, February up to 6% year on year. Bitcoin soared after the release. Again, if they came in worse than what was expected, we were expecting a pullback. If it comes in on target, which is so funny, like these expectations are they're not arbitrary. They're, people do predict them and they put a lot of work into them. But if it meets expectation, then we're going to rip. If it's off by 0.2, 0.1, then it's going to be, all bad news. But this is just another metric that shows that they probably they can't afford to stop raising rates because they are risking inflation, but they do play with all these numbers. And I think Ben mentioned it a little bit on the morning stream. They massage whether it's unemployment numbers or CPI numbers, whether it's core, the core inflation numbers or the indexes. They pull things in and out. They go back 2 years versus 1 year just to massage the numbers. And they've been doing that recently. I don't know if it's in this article or not, but in February, inflation rose by 0.4% on the month, 6% on the year. Today's data aligned with the Dow Jones estimates. Bitcoin soared on the news past 25.4 again. It went all the way up to 26 before cooling down. February's inflation figure is the only second to be, and this is what I'm talking about. This figure is only the second to be calculated under the BLS new weighting system. The consumer price index will be based on single calendar year of data using consumer expenditure data from 2021. Previously, the data was calculated using 2 years of expenditure data.
Convenient. How convenient. So, what year are we missing? Yeah,
I'll just say, Decker, you're a math guy. You're a statistics guy. What good are statistics if you change the model every single time you don't like the outcome?
Well, obviously, everybody's smart here, and the answer to that question is makes the model much more accurate and reliable, especially when now what are you going to compare it to? Right. All the different math that you did before. But number two, we all learn this in math class. When you have more data points, it's more accurate. Mm-hmm. So the average of 3 data points is, if you're taking a poll or whatever, it's going to be much worse than if you take a poll of 3,000 people. So if you have 24 data points and now you just cut it to 12, the last calendar year, also coincidentally missing out a lot of the pain that we had previous to 2022, it basically is like, all right, well, what does this even mean anymore? And it's hard for, especially the layman, to be like it's really hard for me to understand every time these numbers come out, even though I have a degree in finance, that like, what's this really mean? What is this really going to do? And now with the different mathematical model, it makes it even harder.
Yeah, I agree 100%. If they're just changing the numbers, it becomes irrelevant. It just becomes a tool for them to use to work their agenda, whether it's manipulating the market, whether it's pushing inflation up, keeping inflation down, keeping people calm. It's hard to say exactly what their agenda is. We're not going to speculate on that. All we're here to do is look at the data, look at the numbers, and make the best speculation that we can based on that and try to make some money. So we're not living paycheck to paycheck, which is why we dig deep into these altcoin gems in here, try to use them on the rise up. And I know, Drew, you scooped some optimism over the weekend, right? You were in a great mood this morning when we were looking at that OP chart.
I went full ham into optimism. I bought as much as I possibly could. So
that was
feeling great.
I don't know where we're at right now
Drew,
with it, but
sorry.
No,
Drew,
go ahead.
Should we share our math that we did the other day on our percentage crypto holdings?
Oh, so absolutely.
So me and Drew were like, man, how much of our money is in crypto? Why we're not worrying about all these banks and all these defaults and whatnot. I did the math. I have 96.4% of all of my wealth in crypto.
Hey.
And Drew has 98.9%. So
that's awesome. I should do some of that math.
We got chips in the middle.
Yeah.
So, yeah.
There you go. So you're ready. You're ready to pull out. You're ready to pull out of the system, or you pretty much are pulled out.
I'm pretty much. The only downside is dry powder is pretty minimal now because I've unfortunately didn't necessarily wait to the best time, but that's how it is. That's crypto, right?
Yeah, it is. Well, in chemistry, but that's why cash flow is important too. But chemistry bro says what it means is don't trust them. Let's see. Can someone explain why I'm regarded to think the Fed has to stop because each bank dumping means they are adding even more to the inflation issue? Yeah, I do. The Fed's in a really tough spot because if they continue to raise rates, banks will continue to go under. If they stop raising rates, most likely inflation isn't going to fix anytime soon. And if they have to print money, inflation is going to get worse. So they've got to have at least some period of time where they're not raising rates and they're at least maintaining rates before they start bringing the rates down. But he's in a really tough spot right now. He's kind of in a lose-lose, and that might be, again, by design, where they know what's going to happen. Now they're going to continue to do it, and they're going to, again, blame us, blame tech, blame crypto, blame the citizens, basically everybody except themselves. Nothing they did got us into this situation. You should definitely vote for them all again. They're going to take care of you. That's what they're going to tell you, regardless of if that's true or not at all. So let me finish covering this, and then we're going to look at some more fun stuff. Because, again, I don't want to spend too much time. When we know what happened with the bank run, the CPI came out today. We've got the next FOMC meeting next week on the March 22nd. So that is when basically we'll all know what Powell is going to do. Like I said, he's got a tough choice on his hands. I don't know. If I were him, what would I do? I mean, I keep raising the rates. I'd raise at least another 25 basis points, and I think he will, but we'll see. We'll see.
Me too.
Which then could also cool off the Bitcoin pump, keep us in this range a little bit longer, pull us back down again. Maybe 25.2 can act as support now, and we can hang around above this for a little while, which again gives us better chance to jump up that gap. If you're watching this morning, there's not a lot of volume between 25, 26 and the upper ends of 28. So if we could hold above these levels for a decent amount of time, say a couple days into a week, then there's really good chance that we move up to the 28 level. And then once we can clear that, I have a feeling that's going to turn into some pretty good resistance. That I think Frank was saying like 28.8 or something like that could be a pretty strong resistance level. So if we have a rate raise or even a minor one, it'll be priced in. That could be another thing that holds us in this range for a while, which would be consistent with the timeline. So U.S. Federal Reserve set to give its interest rate decision. Oh, I just said all this. Next week on March 22nd. Yada, yada, yada. Okay, I don't need to read it. Okay, so Grayscale analyst wrote, it seems unlikely that the Fed will continue an aggressive rate raising regime. Analysts expect the Fed to cut rates, 25 basis points, looming financial stability risk. So it'd be pretty wild if they went straight from raising to cutting. I think they have to at least maintain for a certain period of time, but we'll see. I'm not the Fed. So.
Yeah, who knows?
That would be insane if they cut rates.
It would be. Oh, if they cut rates, it's blast off time.
I can't see that happening. And especially what Jerome Powell's been like posturing, it doesn't feel like. I feel like in his last meeting, he was saying that we're going to have to raise rates longer than we expected.
Right.
Yeah. Remembering it incorrectly.
He's been consistent with his messaging, but the question.
Well, we also had giant banks just fail.
Exactly.
And the pressure of that, and then like trying to react to that, what are they going to do? Right. So I don't know. Call me a terrible person, but I love all this because I'm just cynical. And this is when your family starts realizing like, oh, maybe Bitcoin was a better option.
Yeah.
Crazy.
Yeah. No, I agree. It is the time. You trying to figure out that music, Drew?
No,
I think it's fixed
discovered.
already.
Well, I accidentally pressed the intro button and it starts the music, but I think I would just want to kind of randomly do it every time there's something to celebrate, like collapses or something like that as well. So,
yeah, no,
silver
good
lining.
Well, I was gonna say, good point from Brian. These are these kind of moments when people start to wake up and question the banking system, question the traditional finance system. I was surprised. I know initially on Friday I didn't hear a lot about it, or over the weekend. But by today, I've gotten a lot of different emails, now obviously some of them from partners like I Trust Capital saying they had no exposure to Silicon Valley Bank, but also even wealth managers that I know that have no connection, no ties to crypto whatsoever, having to respond, explain what happened with Silicon Valley Bank, explain what happens when banks collapse, explain your money is safe and you can withdraw here. And, you don't have to be afraid, because obviously there was a lot of fear in the markets. Which, to Brian's point, when these kind of things happen, it is one of those aha moments, I think, for a lot of people, that maybe everything isn't as safe as they tell you. Maybe it isn't great to put all of your trust, especially when it comes to your family and your future and all of your finances, in somebody outside of yourself. So it's sad that that's the world we live in today, but it is just a fact and reality. So, all right, Bitcoin market cap flips tech giant Meta, widens the gap on Visa. Bitcoin's market cap has climbed to the 11th spot among top assets by market cap, sitting behind electric vehicle maker Tesla. So Meta is also laying off a ton of people today. I wanted to say they're removing 5,000 job listings and cutting 10,000 people. Is that correct, Drew? Did you see that? Is that the right number? Yeah.
They're slashing them.
Following the Elon model, huh?
Yeah, the Elon model. Yeah, absolutely. Well, I mean, I think Elon left a lot of people in place. They just, a lot of people weren't doing much at their jobs is the problem. So
yeah. What were you saying, Hannah?
Meta is also discontinuing NFTs on Instagram.
I did see that. Yeah, so that they had NFTs on Instagram for a hot minute, maybe like 2 months, something like that. Apparently, allegedly, part of what that was to try to sidestep the App Store, basically the in-app purchases on in-game items or in-app items, I guess I should say, having to pay that 30% Apple tax. And then Apple got wind of that, turned up the pressure on them, and then they backed off those NFTs pretty quick. So that was pretty interesting. I'm not sure, that's allegedly, that's unconfirmed, but despite a turbulent week for crypto following the downfall of Silicon Valley Bank and Signature Bank, Bitcoin's market cap has managed to flip the tech giant Meta. Bitcoin's market, and this is just always something to keep an eye on, just to put it in perspective. And I pulled up the full list here. So obviously gold is the big standard. If we could get Bitcoin up to the gold type of market cap, obviously it's got a long ways to go. It's at $12 trillion right now for gold. Apple at 2.3 trillion. You've got silver down here at 1.2 trillion. You get down, where'd it go?
Down there.
Why is it not on here? Bitcoin's not on this list.
What?
Dag nabbit. It's supposed to be right in here.
Well, what's the market cap?
Right between Meta and Tesla.
It's right here. Yeah, it's right under Tesla. The market cap for Bitcoin right now, because they had it on this list, it's right here at 471 trillion. I figured if I linked to the data, it would be on this list as well, but it's not showing.
Snubbed, unsurprised.
So that's like a 20x to the gold market cap.
Yeah, and I don't know why it's not showing here because it says including crypto. But anyway, it should be right in here between Meta and almost $500 billion. It did get as high as $1 trillion before. This was another one fun to watch it. So only a handful of companies in the world, and obviously gold, silver, commodities, they're not businesses, they're not stock, which Bitcoin also isn't a stock. I saw that somebody in the comments like, yeah, this is how stocks work, and they were talking about Bitcoin. I'm like, yeah, well, Bitcoin's not a stock, buddy. So it's different. You're getting shares in a protocol, shares in a network, not necessarily, or pieces or Satoshis on a blockchain network is not like shares in a company. So either way, I just think that's interesting to get that perspective. A lot of people, it's a lot further along than people realize. So I just wanted to share that here with you guys. Also, we got global liquidity. This is another thing I've been interested in keeping an eye on. Obviously, with the U.S. backstopping some of that stuff, that's increasing the U.S. liquidity coming in. So you can see, here it's hard to see with these big, uptick. Was there another one up here? Uptick. A lot of these things that have been on their way down, all starting to curve back to the upside, whether it's EU, US, China, Europe, Japan. We covered Japan and China previously, but now, and we kind of said like the EU and the United States can't ignore this. They can't allow other people to print while they remain flat. This is part of the pressure on the banks. This is part of the rate cuts, the part of the QE that we knew was inevitably coming. Despite what they were saying, they have to inject this liquidity. That's what will prevent these banks from going bust. So again, another, TED Talks Crypto, great Twitter account for you guys to follow. He puts out all kinds of awesome information, Bitcoin and macroeconomics. We pull his charts up here all the time, so I just highly recommend. I will retweet this out. And if you guys want to see where I retweet these, it's just at Hit Network on Twitter. So yeah, you can get that stuff there. All right. 3 major banks have shut down by regulators and put into receivership at the FDIC, and Bitcoin is blasting through 26K. The digital asset is up 59% year to date. So Bitcoin's up almost 60% year to date, guys. Let that sink in.
Wow.
We just had the worst, well, not the worst, but we had a pretty dramatic bear market in 2022. We got right into 2023. We saw it up 40% pretty quick. Now it's up almost 60%. You can stay on the sidelines all you want, but, calling for lower lows. And again, if you think we're going to get lower lows, that's fine. Be ready when we get there. Have a plan, stick to it. But I've said over and over and over, for Bitcoin, anything close to $20,000 is a good buy to me. For Ethereum, anything close to $1,400 is a good buy for me. Those were previous cycle all-time highs, meaning that was the top in 2021. So it went obviously well beyond that that was the top in 2017.
Yep.
Obviously, it went well beyond that in 2021. We saw, I think, obviously 69K Bitcoin, approximately 4,500 Ethereum. I think we'll get well beyond those levels in the next bull market. So I'm not really freaking out over buying at 21 versus 20 versus 19. If you guys still think it's going to hit lower lows, that's fine. Just you're going to be kicking yourself if you wait, and then you end up buying at 40 or 50 or 60 instead of 20. and you're going to be missing something like a 60% move here. What are you laughing at?
I'm sorry. Everybody's asking what you're eating.
Oh, it's chicken salad, guys. Dude, come on. It's pretty. I eat chicken salad quite often.
Everybody's like, man, he's eating healthy for crypto guy.
Hot sauce on top. That's why. That's why.
What kind of hot
it's
sauce though?
Sriracha, of course. Good. Sriracha.
Garlic in that. Sorry, TJ. I was seeing the comments.
No, it's important.
No, it is. You guys want to know? That's why you come to see what I'm eating for lunch. No, I don't think so. But I also thought this was interesting. I like Simple TA a lot of times, and he mentions here it was nearly a perfect retest and rebound on the 200-day moving average. So you can see this yellow line here where we came down, bounced right off of it, filled that gap, ripped up past it. So these are just easy things to keep an eye on. You'll hear Kelly from BitLab Academy talk about it a lot. You'll hear Frank talk about it a lot. There's all kinds of fib extensions, volume profiles, all sorts of other things you can look at, key levels. A lot of times I'm more of a macro longer term guy. I like to look at long-term levels, looking at, daily or weekly charts instead of hourly, 4-hour charts, looking at 200-day moving averages, whether it be on Ethereum, whether it be on Bitcoin. And they tend to act, again, like pretty strong resistances. I mean, you can see here, we were trying to get above it. We banged our head up a few times. Obviously, we had the meltdown here but once you're below it, it's very difficult, which is why these big moves, when we made this big move up here, to get, kind of form that U shape that really did signify the bottom, in my opinion. That's why the beginning of the year was so important. And again, we were right here on this level where a lot of the longer term traders are saying, look, if we can't stay above, what is this at right here? I mean, a lot of people were saying if we lose these levels under 20, we risk going back down here and retesting the all-time lows. Yeah. We bounced off it perfectly and then ripped right up here, which gives us, again, a more support for the process on the way. So anyway, I like to keep it simple sometimes. So there you go. Caleb Franzen, another great account to follow. He does all kinds of good information there, keeping it rolling. Oh, this is a moment for Drew. You were referencing this yesterday.
Oh yeah,
and I was, this is a bank burning in Lebanon, February 2023. This was not that long ago. Why don't you give us a little perspective and context on what's going on over there and why you think this could be a potential, what do you want to say, friction point here soon?
Totally. So basically, Lebanon is, their currency is hyperinflating. They've been moving towards, remember Beirut and what happened in Beirut a few years ago. There's been kind of a proxy conflict going on there for quite some time. They've had ESG narratives try to be pushed down their throat. And now on top of it, you have capital controls coming into the country. So the people have been pushed to a pretty strong edge as far as civil unrest implications there. And you're going to see similar to what happened in Sri Lanka, unravel there in Lebanon over the next few months.
Just for people at home, what happened in Sri Lanka?
Sri Lanka was a complete upheaval of the entire government and everything within it, and massive civil unrest going on for years. And but good to know that Sri Lanka had a 95% ESG score before it all happened, because they were being good little boys and girls until they lost their minds. So yeah, there you go. It's going to be, happening in a bunch of different second and third world countries and even first world countries, in my opinion. I know it sounds hyperbole because we sit here and everything's calm and you can still drive down the road here in America, but a sickness here is a death sentence over there. So
do you see any other countries following that pattern, Drew? Is there any on your radar, or is just kind of as it comes along?
Honestly, I know this is kind of outside the scope, but France has been super pissed about pensions for a long time. So, seeing the people consistently make it out every Saturday over the past few years in France shows me that they are pretty well tired of what's going on over there. And you have a large amount of people kind of, fighting back against the narrative of long-term conflict with their neighbors to the east, because there's much larger implications than just someone else's border going on. So, yeah, I'm watching France, and then, I'm watching most countries, but those are the two that come immediately to my mind. Yeah.
Cool. Thanks, man.
Yeah, no, I think that's good. And like you said, I was shocked not that long ago. Paris was pretty much getting destroyed.
Yeah.
It was very unsafe. I knew somebody that was there, literally had to get snuck out of the country in the cover of night because they're like, look, if they know you're American and you're here, it can go bad quick. You need to get out of town before these riots start. And I was just like, and he didn't he was just there on vacation, enjoying a nice part of town, and then literally everything was getting boarded up. He's like, what is going on?
Yeah.
And that was only 2 or 3 years ago.
Remember the elections were pretty hot last time, and I don't think those feelings have really gone away here. They've actually probably only gotten worse. So, as we see the advertisements and the hyperbole come back into the media, I'd expect something similar to the previous summer of love to come about here, unfortunately. So,
all right. So this is the last thing. We've talked a lot, obviously, about the banks going under. I've explained it a few different ways when it comes to what the banks were doing, having long-term treasuries locked up, the interest rates getting, rising on them, and then it causing people to withdraw funds and basically having a shortfall of liquidity. This is the last thing I'm going to do. I'm going to read this. It's kind of a story-like way when you can think about it from the eyes of the consumer. I'm just trying to help you guys wrap your head around this a few different ways. I know most of you guys here are really smart. I'm sure you guys all understand exactly what happened with the banks, and you don't need this explained. So I will stop harping on it. But I just thought this was a good kind of thought exercise. Again, most of us probably don't have $1 million cash sitting in the bank, but a lot of businesses that we work for do. A lot of corporate funds, brokerages, like I said, companies, treasuries, a lot of them do this. Got to remember, Silicon Valley Bank was a commercial bank. It wasn't really banking, like you and me, retail customers with a few $1,000s. It was banking big businesses. And so a lot of them do have money sitting in the bank. And so this is basically a thought process of what was going through CFOs all over the country, or businesses all over the world, or large depositors at banks. He says, let me tell you a story about the man with $750K uninsured deposits at his bank. You have $1 million in a bank. That means $750K is uninsured, $250K is insured. He's referring to FDIC. FDIC insurance only insures up to $250K. We can talk about real estate maybe a little bit later. So I see your question, Happy Techie. You're in a good bank, but you look and you're like, like say you could be in one of the top 4 banks. You could be in Wells Fargo. You could be in JP Morgan. Like, you're not worried necessarily about your bank going under, but you're thinking, damn, I'm only getting 1% bank yield at this bank, and I'm exposing $750,000 to possible loss. I think my bank is fine, but who knows? Plus, I could take that $750K out and go to a Treasury Direct and earn 5% in T-bills instead of 1%. Plus, I would no longer have any sort of risk by leaving it in the bank. Well, shit, that sounds like a pretty good deal, doesn't it? I should withdraw my money, even though my bank is probably good. I forgot about FDIC insurance, but now I'm remembering how much I have exposed. Again, you're not thinking about FDIC insurance. You're not thinking about needing insurance on your bank funds until something like this happens, and you're starting to question things. Yeah. And you realize I could earn more yield and be safe in treasuries, safer than in your bank and more yield than in your bank. Anyone with over 250K limit is having that same debate right now. So 2 options. Bank raise deposit rates to match treasuries, but this would nuke profitability for banks, or the Fed backstops all deposits in the nation regardless of size. That was basically at the end of that video we watched earlier, some of the questions people asked the president of, like, should we just backstop all of the bankers' deposits? Like, why do these deposits get backstopped and other people's don't? And the answer is they can't afford to print that much money. If it was ever, if people were ever to withdraw, they can't backstop every single bank in the country. The issue is that the yield curve is inverted. Banks make money borrowing short and lending long, but with an inverted yield curve, the business model of banks break down. E.g., you're borrowing money from depositors at 5%, then lending out at 3%, so you're losing 2%. That's the current problem banks are having. Because if a regional bank raised deposit rates, they'll go bankrupt, and the new BTFP facility does nothing for this fact. I'm about to sneeze.
Oh. Oh, yeah.
All right. Sorry about that. Banks so far have avoided raising deposit rates on their customers without too much of a fight to treasuries, but this is changing. Pandora's box has been opened, and the Fed either needs to cut rates to re-stipend the yield curve or needs to backstop all deposits regardless of size and support the banks through that process. I think the latter happens first, but seems the former will need to eventually happen too. So basically meaning he thinks they'll start cutting rates and eventually start backstopping the banks as well. I just thought that might have been an easier way to wrap your head around it if you think about it from the consumer side of, like, wait a minute, why would I leave my money here if I can get better yield there, and it's actually now safer here than it is in my bank? Because even if I did have little to no risk feeling, now I feel like I at least have some level of risk by leaving it in a bank and their uninsured deposits. And why would I leave $750,000, of my $1 million uninsured when I could be getting a higher yield and more insurance doing, making a very minor swap, in my opinion. So that's the big problem facing banks right now. And if that doesn't scare you about what could happen very quickly, you may not be paying attention. So Any thoughts on that? Like Brian, that makes sense to you, right? Like if you were somebody sitting there with $1 million, I know you're a savvy investor. You're not just leaving it in there getting 0.00001% from your bank, right?
No, I mean, you're going to be finding anywhere else to put your money, right? I mean, and it's kind of shocking actually that there's that many people that would be in this kind of situation, I mean, and also 250K, that's pretty dated, right? Like that's been around for a long time. So what is that? Like with all this inflation that's going on, they should at the very least up it if they want people to hold money in banks. Like no one's going to want to hold money in banks.
Great point.
So, that's one thing. And yeah, I mean, I'd put my money in assets like, real estate, Bitcoin, anything that's over that, because I could easily take it out of that. I mean, real estate's a little bit harder. I mean, what else? Where else? I mean, I'm not too like
heavy metals, maybe.
Yeah, heavy metals is a good one too. I mean, gold. I mean, it's hard to, but then you still have to hold that in the bank or safe. It's kind of hard to liquidate.
True. That's why people are looking at treasury bills or money market accounts. Because again, those used to be where you're looking at that in a lot of investors' minds as little to no yield, like 1-2%. Now you're getting 4 or 5% on short-term treasuries that are a lot more liquid, a lot more mobile, that you can actually use if you need it in a pinch, where before you had to have it locked up for a long time. So now the bank's locked into long-term ones. You can take it out and put it into short-term ones. The bank has to sell theirs at a loss, and then now you're actually getting more money. So
how liquid are they? Do you know?
It depends on the way like the way you do it. If you're buying into the short-term ones, they're very, you can get it out within months and, like weeks sometimes. It just depends on how much and how long and all that sort of stuff.
Gotcha.
But yeah, it's very, because some of them it's instant, that's what makes it a money market. But again, that's the problem that's facing banks right now. There's so many other options that are better than a bank. Basically, they've been hustling people for a really long time, and the hustle's basically up at this point. So that's the last time I'll talk about that, allegedly, unless something else
until more collapse.
Yeah, until more collapses. But again, like to Brian's point, that's why I like Bitcoin. That's why I like real estate, and I do feel like. And I thought that was a great point about it. At the very least, the FDIC insurance needs to be raised to match inflation.
Ninja Glock says that too. It was 100 or 150K before, which is funny, around the 2008 era, which is when. So it looks like they upped it after the last banking collapse.
Yep.
So I mean, maybe we can expect that again now.
Yeah, if that was in 2008, 2009, they're due for another update, because they've printed almost double the money supply since then. So you can take it up. They should take it up at least 350. Which again, all that does is tell people you're a little bit more safe, and that's why people are calling for them to backstop them 100%. Let's see, Brazzy B Games. You want to read that one?
I'm back. Quick question. What are y'all's thoughts on best on and off ramps in the U.S. to avoid the most fees when buying and sending crypto off an exchange?
Ooh, I got a good one, actually.
You got a good one, Decker?
Well, Gemini, and you'd be like, well, Decker, it's actually really expensive when I buy ETH on Gemini on my phone. Go to Gemini on the desktop and go to Active Trader. Gemini Active Trader, and you can buy $100 worth of Ethereum with 90 cents in fees. 80 cents. 70 cents, 60 cents, 50 cents normally, versus when you buy on the mobile app, they literally have different fee structures if you look it up.
Coinbase is the same.
Yeah. So you just be careful be careful of the actual
No more
gateway.
Coinbase Pro.
Oh yeah, it's what are they calling it? Coinbase One or something like that?
Yeah, it's like Active Trader. Yeah, I don't know, something different, something similar actually.
But actually buy on the market book, not through their portals, if you really want to save on fees.
Yeah, and Kraken Pro, Hellfire Spawn says is decent. So all that will require KYC, which I guess that wasn't one of your requirements there. Just wanting to on-ramp, off-ramp the most, with the lowest fees. Yeah, well, there you go. Sending crypto off. Well, you said off exchange. What do you mean when you're saying off exchange?
I'm saying, like, hey, if I want to buy ETH and then send it to somebody.
Send it to your own wallet.
Or just to somebody else, I guess. Or yeah.
All right, let's see. What do we got here? This was just last thing on that. Basically, according to Barney Frank here.
Last thing on banks.
Well, it's talking about the signature takeover. He says, "Dear God, Barney Frank openly admits that Signature was arbitrarily shuttered despite no insolvency because regulators wanted to kill off the last major pro crypto bank." Colossus scandal. This is guy on the board of Signature Bank. He said, let's see, that Signature, no real objective reason that Signature had to be seized. I think part of what happened was regulators wanted to send a very strong anti-crypto message. Frank said, we became the poster boy because there was no insolvency based on the fundamentals. So basically just saying we got axed because they don't like crypto and they're trying to cut off pro-crypto banks. I'm not, like we know Operation Choke Point's a real thing. We know they are trying to stifle on and off ramps. I do think a lot of these exchanges are prepared for this and are adapting. I know Barney Fife. I know I thought of the same thing too when I heard Barney Frank. But what are the wallets for Mina? I know a lot of different exchanges hold it. I don't know Mina specific wallets. I'm sure you can look that up on their website. I know it's on KuCoin and BitGet and tons of different exchanges. It's not on Gemini. It's on Coinbase. It's on, you can get it a lot of different places, and then you can look up the wallet for yourself. So,
yeah.
All right, here we go. Let's talk a little. We talk a lot about ChatGPT, AI, OpenAI on this channel. Now we've got, and again, this sounded, Ben, we were talking about this morning. He said when he first read it, he thought it was a complete scam. Apparently, this is real. Sam Altman, who among other things is the CEO of OpenAI, creator of ChatGPT, progressing with his iris scanning ID project Worldcoin. Many concerns around it. They say it's privacy enabled and data gets deleted, but playing with biometric data is dangerous. So more or less, let's see if what the article says here. Worldcoin has unveiled its identity protocol, which people can use to prove they're real online. So it's outlined as being able to identify who's real and who's AI. Like, we're gonna have a world where there's all these AI stuff rolling around. We need some way of verifying, oh, you're a real human, you're not a robot, and they want to do it through your biometric data. We do know they've been collecting that for a while, tying that obviously to cell phone numbers and different data points. They've got your eyeball, they probably got your fingerprint, whether it's Google or Apple, Google associated with 23andMe, they're doing deals with Ancestry.com, pairing DNA to biometrics and all that kind of stuff. It gets really scary really fast. Let's see. To do that, they must get verified, with the main method being Worldcoin's somewhat dystopian orbs. An executive at Tools for Humanity, the lead software contributor to Worldcoin, addressed concerns over the orb and discussed why the rise of consumer-friendly AI makes online identity an even thornier issue. So just before we even dig into this, just the premise of them having all of your biometric data and using it to identify you on a global scale, how does that make you feel, Hannah?
I feel like it's inevitable. It's scary, it's terrifying, but I feel like it's gonna happen one way or another.
You're probably right, and it is scary and terrifying. Drew, what do you think about it?
I'm in danger.
Yeah, you're gonna be the one. This is where it gets, to me, it gets real scary. I always think about it, for whatever reason, airports, whenever I fly, it seems to be like they're testing a lot. They're not testing this technology, but a lot of things that make you feel very like dystopian future world show up at airports before they show up in other places. Those little glass cylinders that you have to walk through, and then the doors close on both sides and you're kind of stuck in the middle, and you get that little anxiety, like, I hope that door opens, or like, what happens if the color turns red and I can't get out? Like, no, but I'm serious. Yeah. That's the kind of stuff that's going to happen. Like, we're all walking through the airport. I walk through, scan, beep, beep, go through, no problem. Brian walks through, Decker walks through, Hannah walks through. All of a sudden, Drew goes to walk through, scans his eyeballs, and like, oh, this crypto prepper guy.
They know my voice on YouTube. I had like 50 subscribers, and they dusted me for like speaking in metaphors. Like, you're telling me that this is going to be safe for me?
No,
it's not. I've already experienced this.
Yeah.
That's not, yeah.
We already see the way they implement it over on the eastern side with the social credit scores, where basically once they have a way, they've got cameras everywhere. They start identifying actions you do, whether you're for the greater good or not for the greater good. You get docked accordingly. There can be, they gamify this stuff, and it goes really south very quickly. This is why, in my opinion, we need a good decentralized identity protocol. There's a lot of people that have been trying to figure it out on blockchain for a long time, but it's a very hairy subject. It's very, prone, but there's a very high incentive for corruption around true identity of the entire globe. I mean, it's a big, big thing to take on, but they will use this to restrict travel, to restrict currency payments, and the fact that they're trying to tie something like this to Worldcoin, it's a little dicey to me. Again, I'd have to read too much or a little bit more into it to know how real it is. But rise of orbs, users can get a World ID on any compatible mobile wallet. One option is the World app, which is still in beta. Orb verification is primarily limited to Argentina, Chile, India, Kenya, Portugal, and Spain, though a broader rollout of these devices will happen later this year. Mobile verification, meanwhile, is available in most countries. The orb has proven divisive. Its unveiling in June 2021 drew sharp backlash from the leading privacy advocates, including Edward Snowden. Yeah, he was, I think I got him here. He was going on it. Yeah. This looks like it produces a global hash. And this is, again, this is where they are, what they say and what they do aren't going to line up. He says, this looks like it produces a global hash database of people's iris scans for quote unquote fairness, and waves away the implications by saying, we deleted the scans. Yeah, but you saved the hashes produced by the scans, hashes that match future scans. Don't catalog eyeballs. And basically that's what he's saying is if they catalog all of this stuff, the way it could be used is very dicey. Chemistry Bro says, I want a cool techie future world where we can use biometrics for stuff, but I want the data stored. I want the data stored in a centralized database controlled by, oh, but I don't want the data. I was like, I'm missing a word here.
I have a take on this too. Like,
Yeah.
like what's crazy is this is amazing.
Right.
Like this technology, like having an online like provable identity is all great in my opinion. It allows us to transact trustless. There's so many things that you could do that you could never do before. You can interact with the entire world and not have to be like, oh, is this person in Nigeria screwing me over? No, like you can verify everything. So it's awesome. It's awesome technology in a perfect world. The problem is we have people that are censoring or doing things based off of politics and you know, like that's where we're going to run into the problems, which, you know, I know Drew is very worried about. A lot of people are very worried about. But then to Hannah's point, this is all coming. It, no matter what.
We're not stopping it. Yeah.
We're not stopping it. I mean, that's just going to be the evolution of, you know, our society, and anything that could save us time or cause us to save money on transactions or interact with a greater group of people, that's what we're going to push for as a human race. Now, how that ends up, we can, you know, vote on that, and hopefully it is decentralized. Am I a little
vote where?
Am I a little cynical on that? And will it be decentralized? It's going to be hard, but you know what? We can try.
Yeah, no, I mean, I agree 100%. This is the evolution of technology. This is the evolution of the world. It's the direction we're going. Only thing we can push for is, I mean, this is why zero knowledge proofs are so important. This is why being able to prove something without knowing completeness of the information and have it stored in a decentralized way. This is why blockchain is so important for the world that we're moving into, because if we don't have it, if it operates on a centralized system, which the people that are in control now would prefer it to do, if we're not the ones advocating for a decentralized, trustless system, an open system, a transparent system, then that's when we get in a lot of trouble. And so the evolution of technology won't stop, but the way it evolves, we have a say in. And I would say that's why it's important for us to raise awareness of the potential downfalls, you know, have these conversations with different people. Now, who knows how quickly it's going to happen? You know, we've talked about that a lot when it comes to AI and all this other stuff. So I do think we have some time. Yeah, Casino Doggy says it all sounds good, depends on who's running it. And that's the idea. If any one person, if any centralized entity is in control of this stuff, it's only a matter of time before it goes sideways, starts to be used for nefarious reasons. If you've watched any sci-fi movie ever, it all starts out great and glorious and lovey-dovey, and then all of a sudden they're using it to control people to do all sorts of different things. So just something to keep an eye on there, obviously. And a lot of times they will roll out the very fun, happy, user-friendly version of a technology that sounds great. Like, oh man, I love this. The same guy that created this thing that we all love that helped everybody is now creating this. Yay, let's push for that. And then it goes sideways. And usually not by the intention of the person creating it. A lot of times people are creating things well-intentioned and they lose control over time. So Robert Hesman said, who controls money supply controls us. Yeah, and that I tend to agree. There's a really good article. I'll try to cover it sometime. It's called, it's written back in 2017 on Wall Street. I think it was a Wall Street Journal article called Bitcoin Beyond the Bubble. I'll pull it up sometime. It's very, very long, but it explains the internet in layers and layers that were missing. You know, so we've got this information layer, but when it got, and that got decentralized, somewhat decentralized fairly quickly as far as the protocols that you can use to transact on the internet. Now the Web 2 that most of us read has kind of settled into a handful of different players, but the two main layers, the most important ones that were missing for us to really be able to use the internet to its full potential, was an identity layer and was a payments layer. So now Bitcoin is rising up to try to be the payments layer. We still need a good identity layer. In the meantime, Google and Facebook have filled that void of a third party for the identity. They know, Google and Facebook know who you are on the internet more than any other service that exists. That's why so many websites are logging with Facebook, logging with Google, because they know they're going to get more accurate information about your identity from one of those two sources than they will if you just create your own account and tell them a little bit about yourself. They'd rather you log in with Facebook. So right now, they're serving that need and that filling that need that was not created on the protocol level when the internet was first launched. Blockchain technology, Web3, as it gets called a lot, allows us to create a decentralized protocol identity layer, a decentralized protocol payments layer, and that will unlock massive potential for what we can do on the internet, massive potential for a global economy. And so it is, to Hannah's point, it is coming. It's just what form will it come in? Privacy advocates need to be there. People like Edward Snowden, he will be demonized, but it's an important thing that we all keep top of mind. So, all right, who wants to look at some altcoins?
Yes.
All right, this is we got anything before we get into this? Let me see if we got anything good from the chat.
Schwab got that World Economic forehead.
What'd they say?
Schwab got that World Economic forehead.
Yeah, he does.
Oh, that's good.
Let's see. Radio Face Crypto. I already can't open Facebook in public any longer because I paused for just a second too long on and now every third post looks like some kind of Wait, what are you doing looking at that? So I hope you were buying something for your wife or your girlfriend, Radio Face.
It saw his retinal reaction to it, and these systems already know you better than you know.
Yeah, it is crazy. If you don't know what they're tracking, I mean, it's crazy. They know where your cursor is for how long and all that sort of stuff. It's crazy looking at some of that stuff, or even Snapchat or TikTok. All of the stuff that it's actually registering when you're taking videos and indexing.
Where your eyes look.
Yeah, they know exactly where your eyes look. They know all that stuff. It's absolutely insane. So, all right, 30, and we're going to go through these pretty quick because we don't have too much time. This is more just kind of FYI to get this on your radar. Thor Hartvitskin. Is that how you would say that? Hartvitskin. Yeah, he's a great, another great account on Twitter to follow. Thor, probably, if I had to guess, probably a Thor chain advocate there. Another fun protocol that's doing good work in the space. I like it, just like Cosmos. But here's some of these we've talked about, some of them we haven't. A lot of them fit into the decentralized exchange niche. So I'm going to spin down some of these to give you guys some research. I wouldn't buy them off of pumps, or if you can just add this to some of these to your accumulation list if you're trying to build out certain niches, and we'll go from there. So Lido V2, again, Lido Finance has been doing extremely well. It's basically staking router, allows anyone to become a node operator through modular plug and play model. Goal is increased decentralization. Withdraws staked ETH holders can withdraw directly from a beacon chain and post to Shanghai. Again, we've talked about that a decent amount on this channel. Veldramify. I'm not going to be terrible at reading these names, but Velo. I'm just going to look this one up. I don't know too much about this one. Custom and adjustment trading fees for pairs. That's pretty cool. Novel approach to concentrated liquidity pool. Overall UI, UX improvements, and much more. Let's look at this, actually. Again, I'm really interested in the decentralized exchange. Is this their official? Here we go. The decentralized exchange niche is something I'm very curious to keep an eye on. Again, we've mentioned DYDX, we've mentioned Apex Exchange, Velas Exchange. So this is Velo, and they all start to sound the same at some point. So looks like it's operating on BNB, BUSD, listed on Bitfinex, Gate, KuCoin, BitThumb, or BitHum, depending on how you want to say it. BitHum. Well, I mean, is it BitThumb or is it BitHum? Is it ByThumb?
I would say, is it ByThumb?
No.
Is it if you drop?
Okay, so Radiant V2 weeks away. Cross chain expansion, BNB chain first. New assets for lending and borrowing, including stake deal. Again, a lot of these in DeFi.
Radiant's cool.
Phantom, FUSD V2 on chain fee system, and these are all things with stuff coming up soon. I think in towards the end of March. I think that's what he said at the top. Yeah, updates with strong catalyst coming in the next few months. So not just March, but a handful of other ones. Rocket Pool, we've definitely talked about that on this channel before. Prepares for withdrawals from Shanghai. It's the Atlas upgrade. 8 ETH mini pools, remaining 24 ETH supplied to the protocol to operate a validator. lower barrier to entry, increased decentralization, gas optimate. Wow, 40% reduction in gas. That's pretty cool. Plutus DAO, GMX, again, another decentralized exchange launching V2 at some point this year, likely Q1, Q2, audits ongoing currently. GMX is one that obviously has gotten a lot of popularity, has a lot of pumps, not one I've played with as much. And this is something to keep in mind when you're playing with these. Obviously, these are lower down the list. I will say these are much higher speculation, much more likely for these to go to zero than, you know, things in your top 20 or top 30. Buying into, like, for example, we've got GMX sitting right here next to Optimism or OP. Not the same necessarily. You know, OP, a very strong layer 2 on Ethereum, in my opinion. Very good likelihood it's going to be hitting, crushing it in 24, 25. GMX, DYDX, Velas Exchange, Apex Exchange, all competing for the same space. Some could absolutely crush it as we move into the next year. Some could absolutely get crushed. So these are not all, you know, bear in mind the market cap of the current project when you're looking at it. Keep in mind the niche they're competing for. Ethereum layer 2, a very high competitive niche with a very big pool. Same with decentralized protocols, but there's way more of them out there when it comes to decentralized exchanges. And if you're trying to build out a portfolio in that niche, you could be in 10 different projects. You don't want to be putting too much money in any one project. You can put, again, depending on what kind of cap, you can put $100 in each one. You can put $1,000 in each one. That was what somebody I was telling the other day when we were looking at Velas Exchange. You know, he's got some money, and I was like, look, you can go put $1,000 in 6 or 8 of these different decentralized exchange tokens, and half of them might crush, and you pull all that money out, or, you know, 3 of them crush and 4 of them go to zero, and you're still in the green. You want to kind of spread the way you build out these niche portfolios, in my opinion. So, but all of these do have potential, or pretty much all of these that I've looked at. Optimism, obviously another channel favorite. We talked about it at the beginning of the show here. Optimism Stack, if you guys know, modular blockchain framework used to easily build scalable rollups, all sorts of OP chains. We know Base, oh, there he goes. Base by Coinbase is the first to utilize this tech. First stage is Bedrock Q1 2023, you know, more below. And actually, let me retweet this whole thing so you guys can all find this. Boom, there you go. You guys got it. Let's see, Rocket Pool we hit, Optimism. Trader Joe, I mentioned at the top of the stream, _XYZ, cross-chain expansion to BYB. We're starting to see more and more of these decentralized exchanges going cross-chain. V-Pool fee switch with basically Stake Joe stakers, limit orders and permissionless liquidity book pools. I know having limit orders on DEXs is nice. It's definitely becoming more and more necessary. I know, like, especially with what was going on over the weekend with USDC and USDT, being able to set limit spot orders, transferring your USDC over to USDT at certain prices, like every time it pumps up, oh, you know, move that over. Every time it got back up to 98 cents, oh, sell a little bit more. I know for sure people were doing that over the weekend. Let's see. Synapsis protocol, building on Ethereum native optimistic rollup, cross-chain messaging, call a contract on one chain and execute on another. That's pretty cool. Built for cross-chain dApps with Synapsis Bridge launching soon. Again, anything this, you know, this is necessary. They're solving for a problem in the space, interoperability. You need to be able to do this. That being said, anytime you're talking about bridges, there are often bugs, there are often exploits. So just know when you're digging down this deep on the pool, there's obviously a lot more risk, which I already said, but I feel like it's worth saying again. Frax Finance continued with the growth of Frax ETH. Is Frax the most competitive staking yield? You know, this is a staking project. Let me see. Pendle offers high yield. I don't know.
We're getting down there.
Yeah, that's what I'm saying. We're getting down.
I think Frax depegged also a little bit.
Yeah, that's what I'm saying. You got to be careful with a lot of these DeFi projects. Synthetics, V3, ETH, and other assets as collateral on synths. LPs, liquidity providers will be available to choose what synths to allocate liquidity at higher risk fees. Again, this is just regular synthetics, right? Yeah. Strong project, strong premise. I feel like it gets a lot of heat from the regulators. This is something that does move the space forward. If you could basically get synthetic versions of all assets on chain where they could get more liquidity and trade faster, that would be great. Uh-oh, did I lose my spot?
No.
Here we go. Let's see. Oh, I'm just gonna spin Dope X. That just sounds cool.
Probably the name alone's pumping mills right there.
Yeah, dopex.io. Ability to mint synthetic tokens with RDPX as part of the collateral. Deflationary pressure on RDPX. First asset will be not too interested in the deep. Obviously Polygon, that's a strong Polygon building large variety of chains. Supernets, Avail, Polygon Zero, Midden, and ZK EVM. I think that comes late March, early. Oh, this says right there, March 27th. There you go. DYDX, I've mentioned already. Another decentralized exchange. Curve Finance, backbone of what DeFi is right now in a lot of different ways. The stablecoins increase in adoption. Curve is positioned to benefit significantly from being the largest on-chain stablecoin liquidity hub. Curve is further getting closer to launch, which creates additional revenue. Curve/VE Curve. So again, that's another one to keep an eye on. Camelot Dex I've heard of. Lyra I have not. Cosmos, crowd favorite. I love Cosmos. They've got an upgrade coming March 15th. We've talked about it on this channel. An interchain security upgrade was approved via governance, and it's launching March 15th. It allows the apps to borrow the Cosmos Hub validator set for security instead of having to bootstrap their own for a fee. MakerDAO, again, Decker mentioned things depegging their DAI. They held a lot of USDC, I believe, in their reserves, and it took them some time to get some of it out of it. MakerDAO, though, one of the best DAOs, in my opinion, been around for a long time. They've been through a lot of different stuff. They exemplify on-chain governance, in my opinion. It's much more of a real functioning DAO than a lot of the other DAOs out there, where yes, it's a DAO in theory, but 12 people have all the tokens and make all the decisions, and there's really no real, they'll listen to the opinion of the crowd, but they don't have to actually take any of that into consideration when they make choices. Aave, obviously another, and again, that's why like Aave and MakerDAO and Optimism, Matic, not in the same category as some of those other ones I mentioned. These are not in any particular order, especially not in market cap order. I'm just going down them for you guys so you guys get some digging. I know once a week you guys like for me to give you some other picks to look at. Treasure DAO, Game Builders Program in partnership with Arbitrum, incentives for game developers to build in the Treasury DAO ecosystem. Again, anything related to Arbitrum right now, getting a lot of attention. Everybody wants to interact with Arbitrum to get that potential airdrop at any point. DZ did win that bet from Friday. It was closest to his number.
Yeah.
Oh, and it hit. He won 2 in a row. Hit 26 before it hit 18. That is true. And then real quick, Uniswap. Obviously, Old Faithful. Uniswap, one of the number one, if not the number one, decentralized exchange by volume. Everybody uses Uniswap. Filecoin. Well, I shouldn't say everybody. A lot of people that use. Pretty much, if you use DeFi at all, you should have had some experience with Uniswap. Filecoin. That should be about enough for you guys. Let's see what else is in here. Boom. There you go. We're done. So Filecoin, keep an eye on it. But yeah, DZ, that is true. I appreciate for the update on the bet. DZ did pick 26K before 18K, so we saw that play out. He also, when we did somebody asked at the end of another stream where the price would be exactly 24 hours. I think he said like 20,200. He was the only one over 20. Most of the rest of us were like 19.9. Frank went all the way down to 19.2.
I didn't expect the bank runs to give Bitcoin such a boner. I mean, it was exciting to watch, but like,
absolutely,
I did not expect that. That came out of the blue.
Yeah, on that day, I made 4 buys. I bought Filecoin at 535 with a sell order on the same day at 606. And then I didn't check it, and I found out that it's like 635 or something. Should have made a higher price. So that was a cool one. And then I bought some DAG because of Drew at 41 cents on Friday. And then I bought 2 ETH at 1,400. So it was good timing.
Yeah.
But yeah, so that was a good weekend for me.
There you go. Rasma tested. If you were under diversified in crypto and down on a few coins you have, would you DCA more into your down holdings to lower your entry average, or diversify asking for a friend? I've done both. I like to diversify down and bring my blended average down. So like, for example, if you got into crypto, like I know many of you did in 2021, when there was a lot of hype and a lot of really good things going on and prices were, going crazy, you're probably underwater on a lot of the first things you bought, even if they're very strong projects. Even if you bought Bitcoin, even if you bought Ethereum, if you bought it in 2021, you're down today. And so the question would be, okay, I've still got a lot of cash on the sidelines. I've still got a lot of other assets. I'm still trying to get into crypto. Would you start new with a new project that you could get a better entry on, or would you bring your blended entry down? There's no one size fits all answer. It kind of depends on the projects you bought. If you bought Shiba back then and you're way down, I'd probably move into like Bitcoin and Ethereum, start a new entry there. Don't try to necessarily, if you bought Solana, probably wouldn't be trying to, pack that bag. You still have to assess the current state of the market today. Never a bad time, in an accumulation market, always great to build out your bags of Bitcoin and Ethereum, especially in this part of the cycle. We saw, they pumped almost as hard as a lot of the other altcoins. Again, I just ran through a bunch of lists that you could definitely start building positions into, the graph, a lot of the other big things Matic, Optimism. There's plenty of strong projects that we feel like will have good performance between now and 2025, really. So getting into new positions, nothing wrong with it. Bringing down your entry on other positions. So for example, you bought Ethereum at $4,000, then you buy a bunch more at $1,000. All of a sudden your entry point, if you put 3 or 4 times as much in towards the bottom, even if you bought it like say 1,200, now all of a sudden your blended entry for Ethereum is 2,000. You only have to get Ethereum to get back up to 2,000 and you're in profit. You're looking at it today sitting at 1,700. Is it? Yeah, 1,750. And you're thinking, okay, yeah, I'm not too far from being in the profit. So that's one way to look at it. Drew or anybody else, Decker, did you have any thoughts on that?
Well, I think it's important what I wanted to say earlier, but important also to watch the narratives. Also, and I'm not talking about the 1 week, 2 week, 3 week narratives, more so like the 1 year, 2 year narratives. So
great point.
One could argue, like, am I going to say that Chainlink is dead? No, I love Chainlink. I bought a good amount of it. I'm in the red on Chainlink. So this is why I'm giving this example. I'm not like chomping at the bit to go dump more money into Chainlink to lower my, $16 buy, average or whatever awful average price it is. At $6 when there's new exciting things that, to be honest, catch my eye more and, in my opinion, are going to probably pump more. When you have new things like OP, Arbitrum, all these new projects, it reminds me of the time like, oh man, I wish I got in ADA when it launched after a year or two.
Yeah.
Or I wish I got into ETH when it launched after a year or two when it was $600. Right? It's like, oh, OP pumped to $3. It's kind of hard to imagine the ceiling a lot higher, but it's just because we're at this one point in time.
Yep.
So long story short, a mix of both is great. I do both, but watch the narratives and don't, especially like TJ saying, don't throw bad money after something that's like really, really gone or not. Just really not.
Don't throw good money after bad.
That's
don't throw good money
that's
after
just
bad
all
money.
a mental discipline thing, though. I
Yep.
think
Yep.
so. Like if it messes with your head to like have this crazy high buy and then like now you're averaging and your average is horrible and it discourages you from buying maybe what is a good project that's underrated, well then like that could be a problem. Maybe you need to just sell that position at a loss and start a new position if you believe in it where it's at now. But really it's all mental. It doesn't really matter what you do in that case. But I was going to ask you, like, this actually brought up the question and you kind of just touched on it. What percentage of your portfolio are you looking for like new projects now? Because we all know those have a lot of potential compared to like just trying to buy solid projects that, might surpass all-time highs in this next bull run. Like, I guess maybe TJ or anyone that wants to answer that.
I mean,
like what because I'm struggling to find like which project, like how much should I really be focusing on new projects or just getting into like solid ones that I know are good?
The way I approach that is I'm putting new money into new projects. I'm not necessarily rebalancing my current portfolio into higher risk project. It's still balanced very heavy into Bitcoin and Ethereum. And again, even a lot of times when I'm putting new money in, I'm still putting it in Bitcoin and Ethereum. Generally, what I'm putting, my extra stuff that goes into Ethereum eventually flows into lower cap altcoins at some point or another, because I use Ethereum as kind of my central currency to move between wallets and things like that and do swaps with. Not really touching a lot of my older projects, but I think, everything you guys just said is great advice, which is kind of similar, like, hey, I'm happy with my position. And that's the way I generally build a portfolio is I build out smart contract, niche, decentralized exchange niche, ZK roll-up niche, and kind of, maybe if you want to go for the storage niche, the AI niche was hot for a while. I don't think it's going to stay as hot through the next cycle, but I think what Decker was saying is very important. If you're in it, at least for the mid to short, swing trading and that sort of stuff, riding the current narrative, especially in these accumulation markets, is how you're actually going to make some big moves rather than like you're going to do well with Bitcoin and Ethereum. Don't get me wrong. It's definitely going to go up between now and the halving. But you're not going to be doing 10Xs on it. I mean, you will by the top, but maybe not on Bitcoin, but you'll do very well. You'll do better than most traditional investing. But if you're trying to take a couple $1,000s and to turn it into life-changing money, you're going to have to play in some of these lower cap projects, and timing of those is very important. And being able to ride the people. people ask all the time, like, hey, can I turn $5,000 into $500,000? You absolutely can in crypto. But in order to do that, you're going to have to stay active, watching channels like this, watching a lot of other channels, doing a lot of research, and knowing every single day what the hot trend is, when to ride it up and when to jump out into something else and take profits. It's not going to be, okay, I'm going to buy these I'm going to put $1,000 into 5 projects and sit on my hands and then cash it all out in a couple of years. More than likely, you'll be up a little bit or even down if you take that approach. So I don't know if that answers your question, but I like to put in new money on my higher risk stuff, take the profits out, roll it into the long-term holds. For me, that's Bitcoin and Ethereum. You know, I've got a lot of Cardano and a lot of other in that smart contract platform niche. So now I'm building out other niches. As they roll up into profit, I can put them into things that, hey, you know, maybe this 5 to 10x's from here, that's enough for me. And then I can roll that into Bitcoin and eventually, you know, roll it into dollars and taking profit and all that sort of stuff. Root says, I wish I jumped out of SafeMoon. Yeah, there's one. Sometimes you just have to look, even if it's a good product, you know, like I'm looking at Polymath still comes up as, you know, a potential for tokenized securities. And it was something I rode with for a really long time. It's still relevant. It still may pump. But I would imagine a lot of you guys in here, you're trying to DCA in with a couple $100 a week, maybe a few $100 a month, something like that, maybe even $1,000 a month, you know, if you can afford it. You know, I'm not sure. I know we've got some pretty good traders in here. You guys are probably doing pretty well, but you know, for the most part, you guys are trying to turn a little bit of money into life-changing money. It's absolutely possible with crypto. It just takes time. I say time in the market is much more important than timing in the market. That's why if you can stay in it for 5+ years, you'll probably be in profit. You'll probably be in really good position. Don't hear me wrong. Don't do too many things. Don't jump in and out too much where you're getting eaten up in fees. You got to let time for your narrative to play out, but that's generally my approach. So yeah. And that's pretty much all we have time for today. Really appreciate you guys hanging out. We do have about 700 of you guys in the chat. Hey, love to see the basement growing. If you guys are watching and you haven't subscribed yet, we're at about 7,500 subscribers. We are going to probably have something special when we get to 10K.
Pizza party.
So you want to get in, you want to get subscribed before that 10K number so you can qualify. So if you haven't subscribed yet, make sure to do that. Hit the like button on the way out. Send it to a friend. Leave us a comment. Tell us what niche you like to buy, what you're focused on in crypto right now. We'll try to see if we can cover some of those projects. I love hearing what you guys are looking at. Dana Carney, Fluffy the Sheep, King Peasant, Stooge Ghoul, Dave B, Red Robles, Paul, Manly Crypto, Covert 3R, TF4s, Chemistry Bro, Pooin78 Div, Joe Stonkman. Oh, now it's moving. Razmataz, Casino Doggy, Rolo 6969, Joey Daniel, IB Mike King, Chemistry Bro, Dave Digital, Happy Techie. We love all of you guys. Have a wonderful day. Buy Bitcoin. Play some games. Smile.